Hey guys, welcome back. In today's video, we are talking about the 10x projection, the phase 3 for AMC, the FTD records, and many more in this video. First, we're taking a look at this from Adam Aram, which talks about the Minions and Monsters opens at AMC Theaters. So if you haven't made the plan, make sure you go and watch it. This is obviously going to be another great film that's going to be released. We are expecting this movie to do extremely good numbers, and it's something that, again, we don't need to talk more about the box office. We already know that it's doing well. What's important is understanding that, of course, AMC is going to benefit the most from this, knowing that we make 50% of the domestic box office revenue and, of course, 25% of global. But it's knowing the fact that we are consistently getting good movies. And this isn't just kind of a one quarter thing, but quarter by quarter, we are seeing these franchise movies. We are seeing even the single movies that are coming out that are doing extremely well. And so this is a very great start to Q3 already. What we are going to be seeing soon is, of course, the Q2 earnings, which will give us very good projections and understandings of how Q3 and Q4 will be even bigger and kind of what it awaits for AMC. And so this, I think, is already a very good start, and I definitely do think if you haven't made a plan to go watch it, make sure you do so. Now, the thing about this now already is that the more earnings we see, the bigger the projection and the bigger AMC is going to get. The reason why I say this is because it's hard to believe that with a booming box office, improving fundamentals, and debt paying down, along with debt maturities not due to 2029, that people are still selling AMC at such a low price. Now, I think when you take a look at this from a different angle, from a different perspective, and you take a look at it from any other company. So if you don't take a look at AMC, if we talk about a different company in a different industry, and we reword this to, if you see a company that's seeing their industry to go off, that it's seeing the company to improve fundamentals and paying down the debt and have lower debt that is due, then think about how undervalued that company would be. Think about how much that company will be talked about and just how many people will be buying into that company. Now, the same thing applies to AMC as well. We are in that same position. The obvious difference is that AMC has too many short sellers stuck, and they're worried about AMC even going up $1, even $2. And so that's what we've said with how the box office allows us to understand how undervalued AMC is. And this is why we're seeing more and more people starting to accumulate, why we talked about the kind of the projections for AMC. And again, going into the future, what we're going to see with Q3 earnings, what we're going to see with Q4 earnings, is just going to be a confirmation of just how right we are. It's going to be an understanding of how revenue will be increased, how the debt payments will be decreased, the interest payment will be decreased, how AMC has more free cash flow to do on other things, whether that's paying off debts, whether that's investing into the infrastructure. So many things right now are all building up. This is the snowball effect that we have been talking about for a very long time. And you're kind of seeing the snowball, it's already started, but what we're seeing right now is really the snowball building up. We're getting that momentum right now. We're seeing how AMC is seeing more and more projections. And this is how we know that people aren't selling AMC at a low price, but rather shorts are worried about AMC going up, and so they find the need to manipulate. Because who do they think they're fooling keeping AMC so low? 185 is ridiculous, 10 times that too. AMC's assets around $9 billion. They're easily manageable based on the projected business into 2029 to 30. So we know that AMC lies here. And it's why I've said the earnings will be important, because it's not something we need the earnings to validate whether or not AMC is going to go bankrupt. That has not been the case for a very long time. But what the earnings will show us is just how fast AMC is going to grow. It talks about how well AMC is going to profit. It talks about how little payments we have to pay for the interest, for the debt, which is still going to be further decreased as we see AMC do more and more things. And so when we talk about just how undervalued it is, even the 10x projection is still low, but it's understanding that we can easily get a 10x on AMC, especially with everything that's ongoing now. Remember, the movie that we talked about, the Minions and Monsters, this isn't going to be the only movie that's going to be released Q3 that's expected to do well. This is just one of the many for the last 2 quarters of the year that is going to do extremely well. And so what we have to realize is that the efficiency of AMC, because remember, we almost hit 3 million on 60 to 10 less movies than in most others for the mark was hit. So what we have to understand is that AMC's price to stock doesn't matter. We know this. It's concession projections, box office numbers, and cost per patron that matters the most. And it's why I've talked about how Q2 earnings is going to give us a very, very good projection on where to go for AMC, because it talks about the efficiency of AMC. We are seeing AMC already having record attendance. That itself is good, but what would be even better is if we know we are able to actually increase the cost per patron, because that means that they are spending more money. So not only are we seeing record attendance, but if that number is going to go up as well, you can see how a multiplier effect will have a massive, massive benefit on AMC. Now, box office numbers, we talked about this already as well. It's not something that we are focusing on too much, in the sense that we know the box office numbers is going to do well. We know that more and more movies are being released. We know that it's thriving. So it's no longer a case of worrying, is the box office back? Because we know it's back. It's more of a matter of just how big can we get and how much of that market share can be snatched by AMC. And so when you combine all of these things together, you start to see just the undervaluation that we have always been talking about on AMC. And also remember is that we conclude Q2 a tad shy of 3 billion, but it's still remarkable because at the end of the day, AMC is still benefiting the most from this. And even during Q2, we still had underperforming big movies. But even then, and this talking about just how much we are seeing the numbers thrive, is that with underperforming movies, we were still able to see such a big projection in comparison to the rest of the Q2 that was being post-COVID. But even pre-COVID, when we talk about all of the box office, we are still close to that, even with underperforming. And it's why I talk about there's no need to focus on whether or not the box office numbers is going to do well or not. We know it's going to do well. It's just a matter of, is it going to beat our expectations? Is it going to do double what we think, fifth of what we think? Those are the things that we are looking at. And another thing is that nothing has changed, because by now the revenue margins, the cost of goods, these are all essentially set. So 50 million, considering where we end, which is around 2.95 billion, it isn't going to be a big problem for us, because if the 50 million is the difference between a profitable and unprofitable quarter, then we have much bigger issues. And it's a very clear case, because just like we always talked about with how AMC is able to get 50% of the domestic box office. So if 50 million is something that's affecting a 1.5 billion domestic box office that we are getting, then that's the problem we should be looking at. But of course it's not. But again, it's about understanding what the Q2 earnings have in store for us. It's about understanding just how efficient AMC truly is. And from there on, we can then obviously understand what we should be looking at going to Q3 and Q4, which right now is still projected very, very well. In terms of AMC right now, we are in phase 3, accumulation, where people are telling retail to sell whilst institutions buy at lows. And for those of you who have been here for a very long time, for those of you who have done your due diligence into AMC, you will know exactly what we are talking about, because what you will see, and anyone can do this, is when you take a look at the articles about AMC, we are seeing a slight change now in this. But in the past, what we saw was just 10 articles, 9 out of 10 will be negative articles, and maybe one will be a positive article, but they will still try and throw some shade in there. Now, this has slightly changed now, where actually maybe in 10 articles, we'll only see perhaps 6 negative, maybe 2 neutral, and then 1 that is positive while still throwing some shades, and then 1 that's very positive on AMC. Now, this is a very good thing in the sense that we are looking at a change. We are seeing more and more people realizing and having to admit where AMC is at. But it's about focusing on the negative articles. What I mean by that is that these articles are telling you to sell. These articles are telling you to never buy. These articles are telling you to stay away from AMC, whilst the institutions, the large capitals, are doing the complete opposite. They have been increasing their accumulation into AMC. And more importantly, they've increased their accumulation every time they see AMC go lower. So the articles are trying to tell you, AMC dropped 20%, sell all your AMC. But the capital, the institutions, are doing the opposite. They see AMC drop 20% and they're buying even more than what they previously would. And this is what we talked about with the accumulation phase for AMC. Now, amidst all of this, during accumulation, they obviously want to buy as much as possible without having any effects, because they want to grab as many shares as cheaply as possible. It's why we're seeing the off-exchange increase. Another big thing about this is obviously last Friday, we saw what would happen to AMC if they use lit exchange more than off off exchange. And since then, when we saw the 14% move, these guys have been extremely scared to even let us see another day of more lit exchanges in dark exchange. But that really tells you everything you need to know about AMC. That tells you what we are doing. In terms of the borrowing for shares, we are seeing 6 million shares being borrowed. We're still seeing constant borrowing of shares. That means for the short sellers, the demand is still there. And once again, the demand wouldn't be there if they are not shorting AMC. If there are no short sellers trapped in AMC, if there is no need to suppress AMC, we wouldn't be seeing this many shares being borrowed. And you can take a look at how many shares have been borrowed in the last few days. And paired with this is taking a look at FTDs, where we saw 3.6 million, which we haven't seen this high since mid of 2024. Now, this is just another proof of how these guys are, of course, trying to find AMC shares, how the demand for AMC shares is there. And so ultimately, when we talk about accumulation, when we talk about are people wanting AMC shares, we are seeing it all here. These are all proofs that they are in need. And what we then see with this is how they're trying to report lowest reported short interest in years. Once again, this is not the case because at the end of the day, this is self-reported. And we've already gone a lot into self-reported. And one of the things you can just take a look at is when you see the self-reported go down, you actually see the synthetic short interest go up. And the big reason for this is because they're trying to create the image that they are not trapped. They're trying to create the image that if they are able to suppress AMC, it's not because people are shorting. But the truth that lies behind that is when you take a look at the synthetic short interest, you see it actually go up even higher than before. And so that really tells you everything that you would need to see. And we talked about how deadly it is for AMC to go up because they can't allow AMC to go to 50, 25, or even 10, but they can't even afford AMC to go to $3 now. Now, there's a big reason for this. We already saw shorts, how they were affected when we saw AMC go above 150. We saw how shorts were affected when we saw AMC go above $2. We saw how shorts got affected when they're above 250. And so this is in their best interest right now. They're trying to allocate all their resources to prevent AMC from going up even higher. And the more we see them kind of trying to resist this, the more we see them trying to kind of push us down away from $3, the more that tells us that actually the margin for them is not that high, in the sense that even if AMC were to go to $4, we are already going to be seeing short sellers heavily in the red. And I think that's another big thing is this, which is right now we're seeing the volume gearing up to enter the push the price higher. So just like what we talked about with accumulation, just like what we talked about right now, it feels like that they are trying to buy right now. And we've seen this in the past before because remember, AMC has presented us with plenty of opportunities. Firstly, it started at 0.93, and then when we had this pullback, it then had another opportunity around 130, and now we're seeing the same opportunity but around the 190 and $2. And I think that this is a very, very good thing. Pullbacks are expected, but the fact we are seeing these pullbacks at a significantly higher level than previous levels, I think that should already tell you everything you need to know. Again, for the technical fans that are out there, this is of course a higher low being created, and so we are looking at that momentum coming in. We are seeing how they are buying, and that's ultimately what we want to see. And with plenty of short squeezes examples in the past before, they all start with a ramp up phase. And this is what we're looking at right now, the ramp up phase for AMC before going into that squeeze. And that is what we are talking about with the volume. That is what we're talking about with how institutions are trying to buy. Furthermore, we're already seeing how more and more movies are being released. We're seeing how AMC is becoming more of a discount, and we're going to really be seeing the price targets go up higher day by day, week by week. Again, for the technical fans that are out there, even at these current levels, we are deep value. Even at these current levels, it makes sense for why people are buying. It makes sense for why we're going to be seeing the price go up even higher. So I'm not worried about what's to come. If you want to take a look at some indicators, it's also showing how AMC is doing extremely well. And so this is kind of the cherry on top with everything that we've said. Now, in terms of the whole leverage derivative short, in terms of everything that we have mentioned in the past, these are what we've said. Firstly, when you take a look at what's going across overboard, we got the Japanese yen carry trade. Then when you talk about all the total return swaps, when you talk about everything that's ongoing with hedge funds illiquidity, banks illiquidity, market makers illiquidity, these all add up to right now. And so any moment we can see all of these derivative leverage shorts all blow up, and that's when AMC is going to go. As far as GME is in the same situation. Swaps, ETF plumbing, all of these illiquidity issues, it's affecting both AMC and GME. So we're going to be seeing them both go up. For the reverse repo, and this is just the sign of illiquidity, we saw it jump up to 26.9 billion on the Tuesday. On the Wednesday, we saw it actually at 1 billion. And I think it's telling you a lot of story right now. Is that right now there are days where margin can easily go out of hand and that they're in desperate need of money. And that's when the day comes that they can't supply with their money, that's when we thrive. And that's what we're ultimately waiting for. As always, this is Financial Advice, and I'll catch you guys next time.